Again, as chair of the House Ways and Means Committee, I find that due to the state of emergency declared by the governor as a result of COVID-19 pandemic, and in accordance with House Rule 67 and the governor's emergency order number 12, pursuant to Executive Order 2020-04, this public body is authorized to meet electronically. This is a work session on revenues. Please note that there is no physical location for members of the public to observe and listen contemporaneously to this meeting. However, in accordance with the emergency order, I am confirming that all members of the committee and select legislative staff have the ability to communicate contemporaneously during this meeting through the Zoom electronic meeting platform, and the public has access to contemporaneously listen and, if necessary, participate in this meeting by the Zoom platform or by telephone. All necessary access information has been made available on the House calendar and through the electronic calendar and the General Court website. The notice for this meeting complies with House Rules RSA 91A. Anyone who has a problem accessing the meeting should call 271-3600 or email hcs@lake.state.nh.us. In the event the public is unable to access the meeting will be adjourned and rescheduled. I want to introduce the staff that are on the meeting. Assisting us, Jennifer Ford, Committee Researcher. And please note that all votes that are taken during this meeting should be done by roll call vote. Let's start the meeting by taking a roll call attendance. When each member states their presence, please also state whether there is anyone in the room with you during this meeting, which is required under the right to know law. Representative Bernstein, could you call the roll?
Thank you, Mr. Chair, and good morning to you and good morning to everyone. It's May the 4th. 5th, sorry. Thank you. May the 5th, and it's currently 10:04 a.m. We'll begin roll call with Representative Patrick Abrami.
Yes, I'm here in my home in Stratham, and my wife is in the house.
Representative Mary Griffin. Representative Jordan Ullery.
Home, Hudson, wife is in the house.
Representative Ober.
Home, Hudson, wife is meeting with the governor at the moment. 6 cats are still here.
When do the cats get to meet with the governor, Russ?
Probably never.
Representative Doucette.
Good morning, Mr. Clerk. Home alone, my home office in Salem.
Good morning. Your clerk is Alan Burstein. I'm in my home in Nottingham, New Hampshire, in my home office by myself. Representative Robert Elliott.
I'm in my daughter's home in Salem, New Hampshire. There's no one else in the house but me and the cat.
She's going to charge you rent real soon, Bob.
Yeah.
Representative Janigian.
Yes, hello. I am in my home office in Salem and my wife is in the house.
Representative Nunes.
Good morning, Mr. Clerk. Happy Cinco de Mayo. I am home alone in Pelham.
Representative Baxter.
Thank you, Mr. Clerk. Good morning to you. My camera is still not working, and I'm here with my father as well.
Good morning, and hello, Dad. Representative Spilsbury.
Good morning. I'm home alone in Charlestown.
Representative Tudor.
Morning. I'm home in Northwood, wife and grandkids upstairs.
Representative Almy.
Home alone in Lebanon. I'm going to have to leave about 5 minutes to 11 for a meeting.
Representative Ames.
I'm here in Jaffrey in my home office alone.
Representative Southworth.
Here in Dover alone.
Representative Malloy.
Here alone in Greenland.
Representative Thomas Schamberg.
Thank you, Representative Bernstein. I'm here in Wilmot with my Cinco de Mayo hat on, and I'm home alone.
We want pictures. Representative Tucker. Representative Gomarlo.
Here in Swansea alone.
Representative Loftman. Representative Gorg.
Good morning. I am present and alone.
Good morning. Representative Hacken Phillips.
Good morning.
Oh, there you are.
Good morning, everybody. I'm coming to you live from my Concord office alone.
Good. Representative Murphy.
Good morning. I am home alone in Hanover.
Chairman Major.
Good morning. I'm in my home. My wife is also here. in Boston.
Very good. Mr. Chair, there are 21 members present, 3 are absent.
Thank you, Representative Bernstein. This morning, we have a few issues to discuss. One is Teresa Rosenberg, a CPA, is going to talk about the PPP loans relative to the taxes that customers that have paid the tax already. And so we can get a feel on how much of the $274 million that we have beyond the plan and business taxes is associated with the PPP loan. And if Senate Bill 3 passes as is, how much of that would have to be refunded. And then we're also going to hear from Chris Shea about the 4 items that subtract from our revenue stream, such as money going to DHHS or the LCHIP or the affordable housing. And that. Primarily the history of how that evolved. And hopefully we won't see many more of those. Hopefully some of these will disappear. And then we want to talk with the DRA on the latest update on the Senate Bill 3 issues. Finally, Representative Bromley wants to talk about House Bill 565. And I think a Senate bill, an omnibus bill that Senate has, which also associated with one section is almost word for word with House Bill 565. So we'll start off as Teresa Rosenberg here.
Yes, I've promoted her to panelist.
Teresa, well, thank you for being here this morning.
Thank you can you hear me?
Yes.
Thank you very much, Representative Major and members of the committee. On your, I think, your screen, you may see Carl Heathfield and Kevin Kennedy. These are CPAs that I have brought that would love to talk to you about what they and have done for their clients with the PPP tax. And Carl is from one of the largest CPA firms in the state, and Kevin has a smaller firm. So I thought it was good to have both, so you can see the treatment they have both their companies have applied. Also, Robin Abbott, who is the executive director of the CPA Society, took a straw poll over the weekend, and Carl and Kevin can give you results of that as well. So if you could allow Carl and Kevin in, that would be great, because they are the ones who prepare the returns. I don't. I wish I were that clever, but I'm not.
That's was what I was going to ask you. So Janine, would you like Carl and Kevin in?
Just did it.
Thank you.
Second.
Thank you.
Go ahead, Teresa.
I think if Carl and Kevin are there, they can start.
Hello, everybody.
Good morning.
Good morning, Carl and Kevin. Go ahead and start.
Yeah. Kevin, do you want to start, or would you like me to?
No, go ahead.
Okay. Hi, good morning, everybody. My name's Carl Heathfield, and as Teresa just mentioned, I'm with Baker Newman Noyes. I'm based out of the Manchester office. And I also am I'm representing the CPA Society today as the co-chair of their tax committee, along with Kevin Kennedy. I guess maybe if we could start by just getting the question on the table that you would like us to address, just so we make sure we're answering the questions that you want to hear about. Maybe that's the best way to start.
The real question is our business taxes are about $275 million ahead of plan this year. And since we haven't passed Senate Bill 3, and the taxes in New Hampshire were due April 15th, then those businesses that received the PPP loans, and there's about 25,000 of them, I guess, would have to report this as income and pay the taxes on it. Now, we would like to get a feeling is, did they do that? And if we do pass Senate Bill 3 as is, then we would see a lot of requests for refunds later on in the year when they file their extension or whatever. So that's our issue, is to try to identify this bulk of money that we have that we hadn't anticipate, how much of that might be associated with the PPP loans that if we pass Senate Bill 3, we're going to have to pay back. Because if we don't do that, people will see we have this money sitting here. And the natural thing for politicians today is, we got money, let's spend it. And we need to warn them what the potential here is if we go one way or the other. So that's the question.
So I can provide a couple of comments on that. And, the first is I don't see that we'd be able to quantify that in any means, just because there's simply not enough data. But I think relative to some of your considerations as to what this amount might be, the PPP loans are taxable in New Hampshire based on the current law when the loans are forgiven. And a vast majority of people who receive PPP loans were not forgiven as of 12/31/20 for various reasons. And because of that, it's unclear based on the funds that were received, what percentage of that is actually because people were anticipating the taxation of the PPP funds or something else. So if indeed it does become non-taxable, the overpayment amounts associated with that are probably not clear, simply because people only would have paid and included that amount to the extent that they were forgiven. And so that's one issue. The other issue is that payments received, I believe, included extensions, and a lot of firms, because they were unclear as to the status of SB3, prepared extensions, a large number of extensions for their business clients. And on the premise that the amount would be taxable, they included with their extension payment a payment to cover the amount that's taxable. If it turns out not to be taxable, then any overpayment associated with the 2020 return that was included in the extension payment would likely be carried forward to subsequent payments or potentially refunded. So to the big question, quantifying it is not easy, but I think there are a lot of considerations relative to how the PPP funds actually are related to that excess amount of revenue.
And you started off by saying that there's a lot of them, PPP loans that haven't been forgiven. Is that because the Small Business Association just hasn't caught up with the paperwork and that these would be forgiven? Because if you took out a PPP loan you take it out because meeting certain requirements that you're going to use at least 60% on wages and the rest of it to support maintaining your employees.
I think the reason that there's a lot that haven't been forgiven is twofold. One is, you may recall that the time period to use the PPP funds were extended. And because of that, people didn't actually utilize their funds or were in a position to apply for forgiveness by the end of the year, because certain conditions of the PPP fund allowed you to rectify, say, shortages in full-time equivalent employee counts through the end of the year. Actually, I think a larger part of the reason forgiveness was not actually applied for. So it's not the SBA that's necessarily behind. It's people hadn't actually applied for forgiveness with their banks. Partly because when the second round of PPP funds became available, banks refocused their systems to process the second draw payments. And many of them shut down the PPP application forgiveness process. So people, clients, businesses couldn't actually apply for forgiveness because those portals at the banks weren't available to them.
So they could apply for PPP loans knowing that they weren't going to use them to retain employees?
No, they applied for the loans and used the funds appropriately. But the loan, the amount they received is a loan by New Hampshire regulations. It's a loan until it's actually forgiven. And so based on the current law, the PPP funds are not considered taxable until the loan is actually forgiven. So until the SBA agrees to forgive the debt, it's a loan on the books and not included in state taxable income.
But they knew that they were applying, that they use these PPP loans for maintaining their employees. So they did the right thing. So they know eventually they would be eligible to have their loans forgiven.
In theory, most businesses, I believe, use the funds appropriately and expect to be forgiven if they haven't been already.
So if that's the case, then eventually, if SB3 passes and they had filed their returns paying the tax because they use current law, they're going to get that money back.
For the amounts that were forgiven in 2020 for the 2020 return. If the loan is forgiven in 2021 and SB3 does not pass, then that income would be included on their 2021 return. Of course, I'm referring to a calendar year return.
Right.
There's a question.
Can I just add, maybe just to help clarify? So I think what we're saying and what we've seen in our practice is that some PPP recipients had their loans forgiven in 2020. Those taxpayers filed, most of them, at least from what we can, from what we've seen in our practice, would have filed extensions because they weren't sure what the final law was going to be on PPP loans. So they filed extensions, paid their extension payments as if the PPP loans were taxable. And if SB3 passes as it is, those taxpayers will have an overpayment that will either get refunded or applied to future periods. The taxpayers that did not apply for forgiveness in 2020 and are applying for forgiveness in 2021 will face the same issue next year. So, if it's still unclear, it'll be a next year issue. But the impact for those taxpayers who will apply for forgiveness in 2021 won't be felt until around this time or the summer of next year, so 2022. I don't know what I couldn't really tell you what percentage of taxpayers have applied for forgiveness in 2020 versus the percentage that applied for forgiveness or will apply in 2021. You know, but it's, you know, it's really those, it falls into those two buckets.
Okay, before I open it up to questions, since we do have a certain amount of about $275 million above what's anticipated for business taxes. Forget about the PPP loans. Has the businesses that remitted their taxes for tax year 2020 have done that well to produce the difference? A good part of this $275 million. Has businesses been that good? You're the accountants, you see this.
Yeah.
Because we have to determine, is it just strictly due to increase in business? And how much of that is due to PPP loans? They have to hand back.
Yeah, I mean, my only response can be somewhat anecdotal, but there certainly are businesses that did well in spite of COVID. And so, you know, I would expect that some of those revenues are, you know, because businesses generated profits or, you know, paid wages that generated BET. And then, you know, many other businesses, you know, were negatively impacted by the situation. And so you know, it's really hard to put a number on that and tell you what percent, you know, give you percentages, but there's certainly some, you know, some population of businesses that had, you know, had strong results in 2021, and those business taxes, whether they're BET taxes or BPT taxes, you know, reflect those results.
Okay, thank you. Representative Browning has a question.
I kind of did, but a lot of it's been answered, I think. But first, what percentage of the would you guess of the filers are calendar year filers? Is it a majority of the filers?
Yes, most businesses are, or the vast majority are calendar year filers. You know, there certainly are fiscal year filers, but you know, typically I mean, for for-profit businesses, calendar year is the most prevalent tax year. Yeah, and I don't know percentage wise, but it's well over 50%.
Okay. And then with the second wave, follow up, Mr. Chair.
Follow
up. The wave that was just approved in the end of December. There's the second phase of this that ends in May 31st. So what kind of guidance is going out to those? Again, that wouldn't affect, that would obviously affect filings for next year. Is that safe to say?
Yes.
But in terms of but these businesses are doing quarterlies, correct? So how would that affect the quarterly payments?
Yeah. Again, it's sort of all over the board, depending on the specific client situation or taxpayer situation. Most businesses would base their estimates on safe harbor, or many of them would base them on safe harbor. So they would really be basing their quarterly estimates on their 2021 taxes, or what they presume their 2021 taxes to be. You know, but not all taxpayers would be doing that. Some would project them based on what they expect their 2022 results to be. And, that it would seem that if the current law is to include PPP forgiveness in the New Hampshire tax base, that they would be making that assumption accordingly. And then obviously if SB3 passes and those funds are not taxable, they would be overpaid. And that would result in some future refunds or application of those overpayments to future tax periods.
And if I can add a little more complexity, a lot of taxpayers actually pay business enterprise tax, and they receive a credit against their business profits tax. And the PPP funds, if they are taxable, apply to the business profits tax, which increase business profits tax. And if they have enough BET credit, reduces the BET credit or credit carry forward. So again, to add some complexity to it, folks may be simply understanding what their BET responsibility is based on their wages and paying quarterlies based on that. And understanding that even if the PPP funds are taxable for business profits tax, the result is really to eat into the BET credit that they've got, not necessarily to increase their overall taxes.
Okay, that's useful. Thank you.
Representative Elmy.
Thank you. I think I just wanted to clear something up before my real question on Mr. Heafield said that they would be basing what they will pay in quarterly estimates this year on the 21 taxes. Did you mean 20 taxes?
Yes, I'm sorry, 2020. Yes, they would be basing them on their 2020 taxes for estimates that they're paying in 2021. Yes, sorry about that.
Thanks. We get confused about these things all the time.
Yeah.
So. On the other, do either of you represent Water's Edge on corporations? The huge majority of our money comes from just about 100 companies, which are mostly Water's Edge and do consolidated returns. Yeah. And I'm wondering whether the CPA Society has members that are active in that area, or whether they're specialized firms that are frequently somewhere else.
Well, I guess I can answer, and then Kevin, you can supplement my answer if what I say doesn't apply to your practice. But for our practice, even though we are a large firm, we're probably not working with those types of companies that you've described, although we may have a few. Most of those are very large companies that would be represented by much larger national firms than ours. So I don't know. We do have many clients who file combined New Hampshire returns, but the amount that of the top 100 taxpayers that you're referring to, I don't know if we represent any of those, or very few of them, certainly.
Sure, and I'll add, we also file unitary returns for our clients, but because of the size of my firm, Water's Edge is not a common issue.
Thank you very much.
Representative Ames.
Thank you. Thank you to both of you for joining us, to all three of you, I should say. Thank you so much. And so we're puzzling through this situation, trying to understand the impact of the proposed Senate Bill 3 change. And the impact sort of has two aspects to it. One is on the state's revenues, and that's really what we've been talking about. And the other is on individual businesses, and we haven't talked so much about that. But on the revenue side, the revenue report that we just received from DRA for this month just ended, April, had a huge increase way beyond historical levels for April, way out of the norm. And if you look at the subcategories that DRA provides to us, the subcategory for extensions is the one that really has the huge increase. And there's some sort of more moderate increase in the estimates. So it's both are looking forward. Well, the extensions is really looking back and making some guesstimates. So my question to you is, and you may not be able to answer this, but could such a huge jump in revenues be explained mostly or in major part by what we're talking about here, the change, or the current BBT rule that may be changed by SB3? So the filings now would be on the assumption that the rule would not be changed, might it be that this huge jump reflects the success of the very big businesses in this time of COVID and the high profits that have come to these big businesses? And as I say, I may be asking too much of you, but if you could offer your wisdom on that question, I'm sure we would all be interested to hear it.
Okay. I think all I can, what I can offer is that I would say that there were many, many more extensions filed for this past year than historical. At least that's what I've seen in our practice. And just in speaking with other CPAs, it's pretty consistent. And not all of those extensions are because of PPP loans. Not all of those extensions are for taxpayers that had PPP loans forgiven in 2020. But there's just a lot more extensions because while PPP is one reason that companies extended, they may have extended for a bunch of other reasons. I mean, there were a lot of changes over the last year with the CARES Act and with the follow-up legislation, both for individuals and businesses, that have taken more time for CPAs and clients to sort out. So I think a lot of those, you're seeing a lot more extensions in general. Some of those extensions are related to the PPP uncertainty, but many of those extensions are just because of all the other complexities and extra time that's needed to prepare complete returns. So I guess that's a long way to say I think a lot of what you're seeing in the data with respect to the extensions is it's not all PPP related. There's some of that, but a lot of it is just taxpayers that extended for a variety of reasons. And I don't know if the revenue numbers you're seeing are because of large companies doing well or better than expected. I think it it really depends on a case-by-case basis. Some did well and some did not do so well.
I'm afraid I don't have much to add to Mr. Heathfield's comments. I agree, extensions occurred for a number of reasons. It's unclear the percentage of extensions that were filed by large corporations, and if those large corporations who presumably received larger PPP funds had filed for forgiveness. So the amount of businesses, the number of businesses that applied for forgiveness in 2020 and included that on their extension or their return is certainly high, but it's unclear in terms of the dollar amounts, how that spread, and if the larger firms had the resources and the ability to apply for forgiveness in 2020 and received them sooner than the vast number of small businesses who didn't apply. So again, it's just more information to put in more complexity to the decision as to what will be the ultimate effect.
Yeah, I guess I would also just add that very large businesses, were not qualified for PPP loans in the first place. And again, it depends on their industry and there are exceptions to that, but in general, the very largest businesses didn't qualify for PPP. Most very large businesses always extend their returns just because the returns are so complicated. They need all the extra time to prepare them.
Right. Okay. A follow-up question?
Follow-up?
Yeah. Thank you. So switching perspectives to the business, the federal rule, it wasn't so clear when we started out after the first COVID bill was passed by Congress, but it became clear in December that the federal rule is that the forgiven loan proceeds are not revenue under the are not taxable revenue, and that deductions may be taken. So it's both of those elements, and we're contemplating going to the federal rule here. There's an argument that that's double dipping, so to speak. The loan proceeds are excluded from the tax picture, and expenses paid for with those loans nonetheless are deducted from other income. And my question to you is if you can help us understand the fairness of doing it the federal way or doing it the current state way. We're struggling with that question too. And there is a proposal, we have a pending amendment before the committee to accept the federal exclusion of the forgiven loan proceeds, but to disallow the deduction of the expenses that were paid for by that forgiven loan. And if you could comment on why is it fair to our businesses to not allow the deduction? Is that unfair? I'm not sure I phrased that exactly right, but maybe you could take a shot at it.
So I guess I guess my response to that would be, the society is neutral on the bill, and in terms of fairness, I think that's a philosophical or political question, and not really one that we're looking to take a position on.
Thank you.
Yeah. Okay.
I agree. I would just add that if the bill is amended to exclude or to disallow deductions, that's really more confusing that's going to be more confusing for taxpayers than just not passing the bill altogether, in my opinion. I mean, either way, it's just a way to make the PPP loan proceeds taxable. Whether you include it as income or disallow the deductions, it's the same result. The forgiven amount becomes a taxable cost to the business. And I think the disallowance of the expenses is a more confusing avenue to do that, because it's much less clear what the timing should be of that recognition of the disallowed. Should it go back to the 2020 year when the expenses were paid for, or does that disallowance happen in the year that the loan is forgiven? We'd need more guidance, I think, for things to be clear. So again, we're neutral on the bill. And so I don't think I want to get into the fairness question, but I think it's always important to try to at least keep things as clear and simple as possible, no matter what the ultimate result ends up being.
Well, thank you for that. That's very helpful.
Okay. Before I go to the next question, Carl and Kevin, do you represent the society? And did you take a vote that you'd be neutral on this bill? Or is that your own terms?
We didn't take a vote as a society. As a society, it's our policy not to advocate one way or the other for tax increases or tax decreases. What we're trying to do and what our mission is to help explain how different changes in tax law impact taxpayers. And also, if we do advocate for anything, as I just said, we advocate for clarity and as much as possible simplicity so that it's easy for taxpayers to comply and it's clear as to what the rules are. But we don't, as a matter of policy, and I mean, this has been voted on in general, not specific to every time we talk about something, but we don't advocate for increases in taxes, decreases in taxes, or new taxes. We're not going to advocate one way or the other for that. It's just the reporting and compliance that we advocate for, being as clear as possible for our clients.
And what you said is it's much clearer to your clients and yourselves. If Senate Bill 3 did not pass, because the client would get the PPP loans, and then and if they used it for what they applied for, they're not going to pay any taxes because it's all deducted. Is that correct?
Yeah, I think the amendment that's been proposed to SB 3 adds confusion to the timing of when those expenses don't get deducted. And I mean, right now, so if you're going to amend SB 3 for that, it would be simpler just to not pass it at all and allow the current law that's in place that the DRA has already issued guidance on to stand, because at this point we understand how that is going to shift.
And we're at a point where it could be the political win, maybe trying to say, you got to forgive it. And then if that's the case, in order to be balanced, we'd have to say, for those that believe it this way, is that then you can't deduct the expenses if they go to the way of the political winds. But anyway, we'll go to the next question.
Representative Major,
Yes.
I have to leave in 10 minutes. Could I ask a question that I think is clarifying before I go?
Sure, can Representative Elmy.
Thank you very much. Thinking about the water's edge for Mr. Hayfield, do you have any idea on whether the subsidiaries of the larger businesses were able to qualify for PPP loans on their own? I've seen some indication of that looking through who got a PPP loan in Lebanon, but I'm not sure whether they were very small people, those, and they probably didn't get good advice. Do you have any idea what the advice would be on that?
Well, I do think if your question is would subsidiaries of those larger Water's Edge groups qualify for PPP, and did some of them receive them? I think the answer is yes, in certain circumstances. I think there was, the general rule that businesses over, I think, 300 employees could not apply or qualify for PPP. There were exceptions to that, and I think some of those exceptions depended on the industry. So I believe restaurants and some hospitality businesses could qualify based on their subsidiaries, situation, and not have to sort of look at the larger group that they belong to. Does that answer your question? So yes, I believe some probably did qualify, and some didn't. Yeah.
Okay, Representative Spilsbury.
Yes, thank you. It's been very, very interesting commentary so far. And I, by the way, do not in any way disagree with the notion that just failing to pass SB3 might be a simpler and more direct route. My concern is that if there's a political will to see SB3 go forward, that the amendment may be necessary. And did I hear you correctly to agree in your comment, I believe, to Representative Ames and Representative Major, that it is essentially true that all PPP loans must be offset by qualified deductions in order to be forgiven?
Yes. So if in order to qualify for forgiveness, they have to have used the loan proceeds for the various types of expenses that were allowed under the program. Most of those being wages, but there were some other expenses that were also qualified.
And so then do you agree that the necessary consequence of that is that portion of their revenue attributable to the PPP loan cannot on net be subject to PPP tax?
I'm sorry, I guess Kevin, I don't know if you had a
No, I'm not sure I understand the question, but to the extent that PPP.
I'm glad to rephrase it.
All right. Well, if I can offer a response, which may be the answer, that PPP funds, a big piece of that were to be used for wages. And in some cases, it was all used for wages. So to the extent that wages were paid with PPP funds, those wages will be included in the BET calculation. Now, if the issue is that the SB3 is passed without an amendment and that it follows essentially the IRS guidelines, The income would not be taxable, but the deductions for payroll would still be allowed. Those deductions for payroll would still be included in the BET calculation for the New Hampshire return. Does that answer your question?
Different, perhaps, but helpful. I think you're confirming that there is a BET impact on from payroll. But I guess I'm just asking you to confirm that to the extent that PPP loans are forgiven as a result of having been used for qualified expenses, that particular revenue is not going to generate any tax under our BPT.
You mean if SB 3 is passed, you mean?
I mean, even if SB 3 is not passed. I mean, if New Hampshire law stays the way it is, and forgiven PPP is therefore included in taxable income, it will be entirely offset by the expenses for which it was used.
The expenses for which it was used will be included as deductions on the return, if that's your question.
Okay, so there's no net tax effect. If I may, Chairman Major, I had another question. So, in our search for evidence and data, we, of course, have to rely heavily on anecdote. And the problem with anecdote is it's spotty. You don't know how well reinforced it is, but I'm thinking of several business owners who I know well here in town, with whom I've had conversation on this topic consistently since March 2020. And I just wonder if I can just describe those two situations very briefly, whether you find them to be representative or aberrations. In one case, I'm talking about the owner of a moving company. And the other case, I'm talking about the owner of a glass company. Both of them, of course, were filled with fear when the government imposed limitations came about. And things temporarily took a nosedive for their businesses in March and April. But by May, particularly June, July, things started to look differently. And they both would have predicted severe impacts. But as it turns out, they both did extraordinarily well in 2020. In the case of the glass company, they weren't installing showers so much, but they were busy all over the place installing plexiglass dividers in schools and elsewhere. And in the case of the moving company, virtually nobody moved for a couple of months, and then they saw a surge like they'd never seen before and broke all their records in the second half of the year. So I think if we were sitting here 12 to 14 months ago using our crystal ball, we would have drawn very different conclusions about who would be winners and who would be losers. There would have been a temptation to assume there were no winners. And as things turned out, I think maybe an awful lot of surprises have occurred. In your practice and just gazing across your clientele, do you see many similar situations, or do you think that these were aberrations?
I have seen some of those situations, and then I've also seen many clients who did struggle and were negatively impacted for the entire year. And it really just depends on the business, who their customers were, and how their customers were impacted, and sort of how that trickled down to them. But yeah, I have seen stories like you've described, and I've seen many stories of sort of the opposite impact as well. It's pretty diverse in terms of what we've seen.
I would agree with Carl. It's pretty diverse.
So basically, the conclusion is there's no pattern.
nothing I can point to.
Thank you very much.
Okay. Representative Murphy.
Oh, thank you, Mr. Chairman, and thanks to our guests for joining us. And I actually was asking the question that Representative Spilsbury just brought up in my mind, given that the CARES Act and the PPP funds were meant to help employees stay afloat, employees get paid, pay for health benefits, pay for retirement benefits and wages. And given that you both have said that your clientele is not the water's edge of the large corporations, it probably is even more appropriate for the question that Representative Spilsbury asked, because it gives us a flavor of the state. And so I was thinking about the various businesses. You have the business that took PPE dollars, and regardless of how they invested it or used it, they folded and declared bankruptcy. They had no business profits tax to speak of. You then have a company that changed their way, received the PPE monies, changed their model perhaps broke even or had minimal profit, and therefore not necessarily impacted with the business profits tax. And then you have the other group that Representative Spilsbury talked about, and I'm trying to just to get a handle in your experiences and in your practices. There's another group that made really a significant profit out of the COVID. Whether they changed their business model, they're putting up plexiglass or whatever that might be, but actually had a significant profit and did take PPP dollars. Do you have a sense, and I'm just trying to get a sense of percentages, in your practices, how would those three groups break down? Is the group that made a significant profit and impacted with the BPP tax, is that a large number, or just a sense? I know you don't have an exact number, but where do you think those three buckets lie?
Yeah, I guess it would be really hard. I would just be guessing. So I don't know.
Yeah, I haven't done any sort of review of that nature.
Are you impressed with a significant number of businesses that have changed their model and have had a significant increase in the profit margin of their businesses as a result of COVID?
No, I can't say that I can, again, I haven't looked at that particular ratio to determine if profit margins are up for, and if so, what percentage of my clients that represents.
Okay.
I mean, there are some, absolutely.
Thank you.
Okay, Representative Bromley.
Thank you, Mr. Chair. One thing that came up in our hearings was discussion of the Main Street program, which took some of the 1.8 billion that the state got and used it for a similar state-driven program. I'm just curious, and our understanding is that there's this is totally different, and that there'd be no forgiveness of the revenue or of the loan. I don't even think it was created as a loan program. I'm not even sure. But have any of your clients mentioned the Main Street program to you, or whether they want to see some kind of a similar thing done with those revenues as not being taxable?
Well, I mean, in terms of businesses that receive them, I'm sure any business owner would be happy not to have to pay tax on them. And, in getting back to the kind of the original question when this all started is, in terms of the extensions and things, my firm at least has, for any client, unless there's a clear indication that they're going to have to pay the Main Street relief funds, those funds were included in 2020, even though it was presumed, even though there may be a small chance they have to pay it back. And so that income is included in the 2020 estimates for the extensions. But I'm I can only imagine that businesses would be happy to see that the Main Street funds are included with the non-taxation of PPP funds if that happens.
All right, thank you.
Any further questions from the committee members? I see none, and both Kevin and Carl and Teresa, thank you very much for coming in and helping us understand this situation. We still have a ways to go.
And good luck to you, Representative.
Thank
And to all of you.
Thank you for including us, Representative.
Right. Before you go, I got and I think every member got a email from a CPA organization, and it looks like they're taking a stand. You know of many CPA organizations that are taking a stand one way or the other relative to Senate Bill 3?
I'm not aware of, I'm not aware. I don't know.
Yeah, no, neither am I.
That could be. Do you have the specific organization name?
Yeah, I've got it, Representative Major, if you want.
Go ahead, Representative Ames.
It's Mason Rich.
Okay. So there's specific firms, not necessarily the CPA Society.
Yeah, that's right. This was Mason Rich Professional Association. And it just came in this morning, I guess.
This morning, I read it once and oh my God. And I'm going to have to read that slowly again.
Yeah, it's dense.
I was surprised. I would have thought that most CPAs would be neutral in that, but you don't know of many CPAs that are out there, because I don't know how many more of these letters we're going to get from CPA groups.
Representative Major, I think Robin Abbott is listening to this, and she may be able to give some light if Mason and Rich has contacted the society about a position. To my knowledge, we haven't heard from anyone, any individual society asking for position. We've heard from a lot of individual individual firms asking what the outcome is of Senate Bill 3, and it's been more for clarification how to treat the grant or loan in the tax returns. But Robin may be able to say if others have contacted her out of position. But to my knowledge, we've really been hearing mainly from firms of, have you all made a decision?
Okay, I noticed in the attendees, there's an NHS CPA. Is that a firm or an organization?
That would be Robin Abbott, the executive director of the New Hampshire Society of CPAs.
Would she be willing to join us?
Just promoted her.
Thank you. Robin?
I am here. Can you hear me?
Yes. Were you able to listen to the discussion that
I did. I listened to the whole discussion, and thank you very much for having us on today. I missed the last maybe 10 seconds of your comments, but Teresa summed it up very nicely, as well as Carl and Kevin. So I really want to thank them for being present. They are stellar in what they do, and which is why they represent our tax committee. But to your point, I would say there are no specific firms that have reached out to us with the position. However, many have shown quite a great deal of interest on which this was going, so that they could advise their clients, because their clients have been very stressed about this situation in particular. The one organization I would say that does take a stand that you may know of is a national organization called the American Institute of Certified Public Accountants. That's the AICPA. So many of you have probably heard of them before. They tend to take a more national legislative stance, and oftentimes will trickle down their guidance to us. Whether or not we use that is really up to the society and our board and our members. And Carl said it perfectly, as did Kevin, as we are neutral on bills, but what we try to do is educate our members and educate the legislators as far as, you know, what both sides are doing. So I hope that answers your question.
Yes, it does. Thank you. Does the committee have any further questions to ask of this distinguished group of people?
Representative Major, Representative Tudor here. Did I hear you talk about a straw poll in the beginning of this? Did I miss that, or were you going to tell us about a straw poll?
I'd be happy to tell you. It was really just kind of a soft poll to some of my more active members as far as what their sentiment was on SB3, and many who have had interest in this from the beginning. And I would say, you know, Carl summed it up perfectly. Most CPAs are really participating in extensions with their clients, or if they aren't, they are paying a portion of what they expect is the PPP with a bit of you know, uncomfortableness. I would say what I hear mostly is that most of our members, and again, we do not take a stand, but most of our members are in support of SB3. We're one of the only states that is sort of taxing this money. So kind of has an icky feel to it and I understand our tax structure is very different from other states around the country and including in New England. But what we've sort of heard is that people are feeling sort of not so great about being taxed on sort of this found money. But again, understanding our tax structure is different. You know, we're doing what we have to do, but I will say this, and to credit Carl and Kevin for being here today when there was that IRA extension on the 17th and they had the deadline on the 15th. This has probably been one of the worst years by far for members that they have ever experienced. I mean, I'm getting calls on a routine basis of, yep, that's it, I'm done. I'm hanging up my for sale sign. I'm good, I'm not doing this anymore. It's been really challenging. So if there's any way that you can make the practitioners and their clients' lives a little bit clearer, a little easier, that would go a long way.
Right, and clear and easier doesn't mean you're taking a stand.
Exactly, does not.
All right, any further questions? Seeing none, thank you very much for appearing with us today.
You're welcome.
Thank you.
Thank you.
Okay. And for committee members, why don't we just take a quick couple-minute break and then we'll go to the next issue. Christopher Shea. Guess he's not back yet.
Do you need help figuring out the numbers for Josh?
Yeah. Yeah. Do we keep the bills for that?
Representative Major, Representative Ober here.
Yes, Representative Ober.
Rumor has it that SB 3 is going to be put into the budget by the Senate. Rumor has it.
The Senate does what it wants to do. Wow. All right, Chris.
Yes, Representative Major, I'm here.
Okay, good. I think we can get started. And having Chris do, we have on our revenues, we have 4 revenues that money is taken from it, such as going to DHHS, LCHIP, affordable housing, and likewise. And Chris is going to talk about these and give the committee members, especially those that have come on in the last few years, a history of how this happened and what it does. So you all set, Chris?
Thank you, Representative Major. So the reason that I'm here today to talk about this, if some of you were on the call, I think 2 meetings ago, and I brought up the Liquor Commission, there was a potential for a transfer of liquor funds over to Department of Health and Human Services for the New Hampshire Granted Advantage Program. And we didn't know the amount, and we still don't know the amount. And then the members of the committee were asking, what other programs do we see money come in on a cash basis that then is moved to a restricted or a certain purpose instead of going into the unrestricted general fund. And I named 4 that, in addition to that, I named 3 others that I was aware of. As a follow-up, Representative Spilsbury reached out to me to get a little bit more information, kind of why this occurred and some of the history. And I had done some work for him, which he then asked Representative Major to, suggesting that maybe I should talk to the committee in total and kind of go over some of these funds and how they occurred and where we are today with them. So that's what I'm going to do at a kind of a high level. I'm going to share my screen, and it's just going to be, it's a narrative of the different programs, basically law or chapter law. But I'll talk through kind of how we got to that point. Oh, well, I can't share my screen. It's disabled right now, but I'm going to start with the LCHIP program.
Jenny?
I just changed those settings, Chris. Sorry about that.
Oh, that's okay. Thank you, Jen. So you should see LCHIP and some yellow highlights. So the LCHIP program is the Land and Community Heritage Investment Program. It's a program that matches local or nonprofit funds to conserve property, buildings throughout the state. It's a competitive program. It's something that, started back in the early 2000s. And from 2002 to 2008, the legislature would put appropriations in the budget to fund LCHIP. And what would typically occur is there'd be an appropriation for a certain amount through the budget process. It would be reduced or removed in total. So the program didn't have the seed money to do what it was charged to do. Sometimes there was other efforts to add money in separate bills, and those wouldn't survive. So there was lots of discussion in the legislative body and interested groups to try to come up with a dedicated funding mechanism for the LCHIP program. And what was decided is that a surcharge on certain documents that the Register of Deeds processes. And in this sheet before you, you can see Roman 2, the highlighted part, an additional charge of $25 shall be assessed. So that was the amount that was agreed up to in 2008 session to fund the LCHIP program. And then what occurred with that is they basically said, Register of Deeds, you shall collect this and remit it back to the state of New Hampshire, basically using the same mechanism that the REP money comes to the state of New Hampshire. And it would go to the DRA, who would then peel off or account for the the surcharge related to the LCHIP program. And then that would be used to pay the LCHIP program through Treasury. If you were to look at the operating budget, you will find in the Treasury's operating budget, there's an accounting unit that is for LCHIP. So the Treasury actually cuts a check to LCHIP at the start of each fiscal year. There's an estimated budget on what they think they might gain in revenue. And if they don't gain that, then they don't get all the appropriation. If they get more than what they've estimated, they're able to come through fiscal, through Treasury to accept the additional revenue, which they've done the last few years. So it is money that comes in, and on a monthly basis, there's an adjustment made to remove it from the cash and put it where it belongs with Treasury to go to LCHIP. Right now, they're estimating about $5 million a year that is removed as a result of the surcharge. So it's not the RET tax that is doing this. It's a separate surcharge, but it just comes in the door, kind of on the back of the RET tax, because back when they put this together, there was a lot of discussion about creating more work at the local level in terms of collecting and remitting revenue back to the state. So that's the LCHIP. I mean, if anybody has any questions.
Any questions?
I see Representative Brahmi.
Yes, thanks, Chris. So when we do our revenue estimates, we're not including that $25?
No.
Yeah.
Usually it's backed out. So that when you get to the end of the year, there's throughout every month that's backed out of the cash number, right? So at the end of the year, there's an adjustment made. You've heard about all these adjustments that occur at the end of the year. So when you get your total at the end, you know that the 5 million, it's been 3 to 5 million a year, is not included in your base number.
Okay, so.
And I guess one other, sorry, go ahead.
Okay, I'm just wondering, does that get budgeted somewhere, that 5 million, or is that just money that comes into that fund?
So that's budgeted in the Treasury's operating budget.
I get it. Okay.
So it's been in there for a number of years. And it continues to be there I think for a number of reasons. I think one of them is so that people who are interested in what's going on with the LCHIP program can actually see there's an appropriation that goes to that program. Okay. One thing that did occur when this surcharge was put in place, the first few budget cycles, the LCHIP program still didn't get to 100% of the revenue generated. The legislature would put language in House Bill 2 or a version of the trailer bill to redirect some of that revenue back to the general fund. These were years when we were going through the Great Recession or coming out of the Great Recession. So you may have heard, if you've been around at all, you've heard the term rating dedicated funds, rate on the fund. And so that was occurring. And there was efforts by the supporters of the LCHIP program and other dedicated funds to ask the legislature to stop doing that. So that since about 2017, I think, there's been no adjustment. Everything has gone to the LCHIP program.
And when we get the periodic reports from the Department of Administrative Services, it'll tell us, like, the recent one says LCHIP approximately $500,000, which will come out of RATT on the 16th of the month.
Yep.
Month.
Yeah. So there's an accounting for it, but depending on when you're looking at a report, it still may be in the cash. So it gets a little confusing, but it is adjusted out. And again, when you're doing your estimates in the committee, that's been accounted for. So the next is the school building aid debt service that comes out of the meals and rooms tax. So again, similar to Rhett, there's a note typically on some of the reports that you get that says by the certain day of the month, the amount going to the building aid debt service will be removed from the numbers. So what occurred here is back in 2008, 2009, 10, and 11. So those fiscal years, but starting in 2008 session year, there was concerns with the recession just getting started, concern on meeting the promise to the communities that had borrowed money to build school buildings, and the state's school building aid program, where they match a percentage. I think it's up to like 20% of the cost of the debt service for these buildings. At that time, building aid, it was a significant amount of the budget. It was about $40 million a year, and decisions had to be made on how do we fund some of these things. We don't have the revenue to support it. So back in 2009, during this was what I'm showing you is the language that's contained in Chapter 144 laws of 2009. That was House Bill 2 at the time. You're going to see that a number of things occurred with the meals and rooms tax at that time. It went from 8% to 9%. So that's the first part of this. You're going to see there was a section put in that said you're going to take the amount necessary, so the yellow bold here, to pay the interest on the bonds and notes that were authorized. And the 198:15A relates to the school building aid debt, as well as the amount of 3.15% that would go to the former DRED travel and tourism. That number came up earlier with this committee about a month ago, 6 weeks ago. There was some question about this number being suspended in the budget, and that is correct. So instead of the budget reflecting 3.15% of the meals and rooms collected, it's something slightly less than that. There's still over $17 million over the biennium going to travel and tourism, but the governor and the House proposal is slightly different than what 3.15 would equal. And as I said, the school building aid during that period, in 2009, it was going to be a $40 million appropriation. And then in 10 and 11, it was just under 45 million, and then 46.2 million. So you're paying on this debt service out to 2030. So until that point, unless something changes, you'll see an amount taken off every month to pay this debt service related to the bonds for school building aid. The amount is going down now. So the high point, or the most that was ever paid in a particular year, was about 14 million. It's down to about 8 million now a year, and it'll continue to trickle down as we get closer to the end. Again, it was a decision made at a time when revenues were lower than anticipated. There was no projection to go forward, but the state wanted to continue to meet that obligation or promise it had made to the schools and the communities related to the school building aid. So that's all I really had to say on that, and I can move to the next thing unless there's a question.
There doesn't seem to be any questions. Go ahead.
All right.
I just raised my hand, Norm.
Oh, Abrami.
I just happened to notice on the first page of that last two slides that campsites were to be taxed, and that didn't last very long now, did it?
No. That's why I didn't bring it up.
No, I couldn't resist. I know that was
but-
repealed very quickly.
And I guess I should say part of the reason I show you that there was an increase in the meals and rooms tax rate, that was part of the debate for justifying that it was okay to, at least for the biennium they were budgeting for, the 10 and 11 biennium, that increase would have allowed for enough money to cover the debt service associated with the school bonding aid, school building aid bonding debt service. So that was the reason I showed it there. It wasn't to create any other discussion. The next and the more recent one that you guys are hearing about is the liquor fund transfer related to the New Hampshire Granted Advantage. So as many people know, back in 2014, there was changes to Medicaid and health insurance through why is it slipping me? That basically President Obama's changed to healthcare, and one of the changes was to allow for an expansion to Medicaid. And there was a lot of discussion, a lot of concern in the state, as in many states, about this expansion and the costs associated with it. When it was first proposed, the federal government was paying 100% of that expansion cost, or the Medicaid cost associated with that. And then over the years, it was going to come down from 100% to where we are today at 90%. So there was concerns that, and it was kind of likened to the idea of special ed funding that the feds had always promised that would be provided to states, and there was feelings that they've never fully lived up to that promise, that they would do the same thing with the federal dollars associated with the Medicaid expansion. So the legislature passed bills to get it started, and then again in 2018, because of some changes with the funding mix, reauthorized it as the New Hampshire Granted Advantage Healthcare Program, and then created a trust fund. And one of the things in the trust fund that was negotiated at the time and has been a focus is that no state general fund shall be deposited into the fund. So the Medicaid expansion program should continue forward without any general funds. That was very important and something that's remained in statute since then. But as we've gotten increased in the numbers of people participating in the program, along with the funding mix being more, the state providing a greater share, there was some concerns that there's not enough money coming in through the health insurance premium or any other way that is covering the full cost between the 90% the federal government pays for and the 10% that the state would be responsible for. So in the law, there's a section, it's Romans 6, and you're going to see the highlighted piece. If you were to remove the highlighted piece, that's what was there up until 2019. So it basically read, the commissioner, in accordance with the most current available information, shall be responsible for determining quarterly commencing no later than December 31, 2018, whether there is sufficient funding in the fund to cover projected program costs for the non-federal share for the next 6-month period. If at any time the commissioner determines that a projected shortfall exists, he or she will terminate the program in accordance with the federally approved terms and conditions issued by CMC. So prior to the Liquor Commission aspect being added, that was the concern. And if that language wasn't in there earlier this year, Health and Human Services would have had to abide, if there had been no change, would have had to abide by this language and start to terminate or close down the Medicaid expanded program because of lack of funding. So one way to address this was to use the Liquor Commission fund. And the suggestion is it's not, at this point, it's not general funds. So you've still abided by the no use of general funds. But because of the uncertainty and knowing what kind of shortfall you're going to have in the out years, they've allowed for an open appropriation and for the amount necessary to be transferred from the Liquor Commission fund. And then there's a statement that, if there's insufficient funds from the liquor fund, then they shall at that point start the process to close or eliminate the program. So that's how that occurred, and that's the reason it's occurred, is that the legislature a couple of years ago was looking for a mechanism that could fund the program if there was a shortfall without assigning general funds to it. And then the last one, and probably the most recent one that you've seen, is the affordable housing. Affordable housing is not a new issue in the state of New Hampshire. It's been discussed, for over 10 years now in various venues. If you were to do a simple search in the bill search function on the website, you're going to see bills going back, like I said, 10 years or more for study committees, commissions, bills that would have provided capital appropriations to do affordable housing, incentives for your municipalities and local governments to set up affordable housing funds. And in the last few years, you've heard a lot of discussion about workforce and the inability for the workforce to find housing, which is creating some challenges for businesses that want to grow or expand or move into the area. So this last budget session, it was felt that, this is probably the right time to dedicate or restrict $5 million a year that comes in through the real estate transfer tax to go into the Affordable Housing Fund. And then the Housing Finance Authority is responsible for that fund, and they would be the group making it available to the communities and the places and businesses that would be eligible for it. So you saw that hit the first time back in September of this September 20. And it caused a lot of questions at that time, because as you saw a comment about a reduction of $5 million for the Housing Finance Authority for the affordable housing in the revenue focus that came out after that month. So I think, the reason I'm talking about this is just to provide you a little bit of a history on why some of these actions occurred. It's many times it's not as a result of, today I think it's a good idea that I take money and restrict it from this fund for a purpose that is fairly newly discussed. Most of these have had discussions for a number of legislative sessions, and there's been a number of different efforts to find a way to have a steady revenue stream for them. So those are the four that stuck out, and that I kind of talked about at a high level the other day, and this is just a little bit lower, but still at a high level. So that's all I have.
Thank you, Chris. And with this mechanism, if you continue dedicating these revenue streams to specific items, then there'd be a lot less general fund that can be utilized to support the rest of the budget. And it kind of short circuits the regular budget process.
I think Representative Almy jumped off the call she had a conflict with another meeting, but if I think she was on the call, she would probably, I'm going to suggest that she would make a comment about the whole dedicated fund process, where
Yes.
that's, in some ways this is like that. It's restricting a certain revenue or a piece of a certain revenue for a purpose. The dedicated funds are truly that, where the revenue doesn't come into the collections of the general fund or the highway fund or that we see in the revenue focus, but they go directly to those funds. The four that I just shared with you are slightly different in that they do kind of pass through the collection of the revenue that you see in the revenue focus, and then they're deposited to a particular place. I think Representative Brahmi has his hand up, Representative Major.
Representative Brahmi.
Yeah, I just want to ask Chris if you can send us this slide pack.
Yep. I'll do that.
Okay, thank you.
All right. Well, thank you very much, Chris. Well appreciated.
Oh, you're welcome.
And Janine, if you could, thank you. I've asked the DRA to be present. If any update on the revenues lost due to Senate Bill 3, and they emailed you the latest estimate, but if we could bring in Carolyn and Melissa.
Mr. Chair, Representative Gomarlo cut out, so I've just promoted Carolyn, Melissa, and Devin.
Oh, thank you.
Good morning, representatives.
Good morning. So Carolyn, could you give us an update of where we are on Senate Bill 3 and its effect on revenues?
Yeah, so what you saw this morning was our analysis of the fiscal impact, assuming that all PPP loans were issued by the end of the month. That is a fiscal impact of just under $100 million. And I saw a news article come across my screen this morning that I didn't have an opportunity to open up that said that as of today, they have exhausted the full appropriation for PPP. So I think that is a good final impact for you folks to use.
I saw the same thing this morning. Yeah.
Right now, where do we go from here? I think the department is trying to look at some possible methodologies for helping you understand the fiscal year impact of our analysis. We've presented it as a total, but not broken it up by fiscal year, but certainly we would expect it to happen across many fiscal years. Representative Ames had forwarded the California analysis, and we're actually trying to do some digging to see if we can speak with someone from California to see how they broke their analysis up by fiscal year for PPP, for their PPP bill.
Yeah, and the California, on their analysis, they said it's going to cost them $6.2 billion by forgiving the loan. But I have no idea what their total revenue is on corporate taxes.
Agreed. And I also noted when I pulled up that bill, it was a bit more comprehensive than ours. It also included the impact for certain federal treatment of EIDL loans, which is not contained within our SB3. So we'll have to carefully sort of evaluate whether the California methodology works for our bill, but we are looking into that. Excuse me.
If I may, Representative Major.
Representative Ames.
Yeah, that's great. I'm glad you're looking at that. Another difference for California is that they've excluded publicly traded companies, and I don't know what the dimensions of that would be, but I don't think we could do that in New Hampshire, even if we wanted to. And then there's a $25,000 rule that they've got in there. So firms that had, I can't remember how it works, but there's a $25,000 bar in terms of revenues. Maybe you can explain it. I can't quite put it together.
I think it's the 25% decline, 2020 over 19.
Thank you.
And I think the only other thing that I would add is I think the testimony that you heard from the CPAs today was very helpful. I think that we often don't have the very granular taxpayer perspective on these things because we're not return preparers. So I think it's definitely helpful to understand what they're seeing in the field, to know that really there's a spectrum of treatments that taxpayers have adopted. And certainly we are seeing currently, and Melissa can jump in with the stats if she wants to, but we are seeing very high levels of extensions this year. And I think that means that we're going to have really limited information about what taxpayers have done on their 2020 returns until such time as those extended returns are in fact filed. what we have now for data is just so limited that it's not particularly useful.
If I may comment, that,
Go ahead.
yeah. So the extensions are, correct me if I'm wrong, but the amount of money paid with it, for extensions is unprecedented in its size. And yet it's a black hole for you. You don't, all you have is a number. Is that correct?
That's exactly right. Melissa, do you have the exact stats?
Sure. Melissa Rollins, Senior Financial Analyst for the department. Yeah, everything you're saying, Representative Ames, is completely accurate. So extensions this month were 131.5 million. That is, we have a 10-year trend on the estimate analysis and voucher analysis that we send out to you, and that is by far the highest we have ever seen. It's 195% above fiscal year 20. However, I caution you to compare it to fiscal year 20 because we do know that the federal due date and state New Hampshire due date in fiscal year 20 was extended to June for New Hampshire and July for federal. But if you do compare that to fiscal year 19, it's about 51 million above, or 63% above 2019. So a very significant increase in dollars and counts for sure for extensions.
Representative Spilsbury.
Thank you, Mr. Chairman. I thought that the question that Representative Ames asked yesterday during our discussion about timing posed potential conundrums that we hadn't thought about, and I certainly wasn't in a position to clarify. So both of the accountants who spoke to us this morning alluded to that same concern when they were talking about the relative merits of amending SB3 versus just not passing it. And it seemed to me when they were saying that the discrepancies in timing actually highlight a fundamental flaw in the intent of SB3, and that is, if it's already true that qualifying for loan forgiveness requires deploying the funds for qualified expenses, they've already been offset. What we're doing here, if we also allow the deductions to be taken, is we're delinking the expenses from the source of funds. And this delinking, this allowing expenses that were already used, that were already paid for with one set of funds to be deducted against another set of revenue, is exacerbating the timing problem.
Was there, yeah, I agree. And was there a question, or were you just asking if I agreed with that?
I suppose I'm asking if you agree, but I guess the point is that if the amendment, if the purpose of the amendment to SB3 is in effect to neutralize the impact of SB3, is it probably not correct that the accountant's observation is it might be better to just not pass SB3 because that would be the less complicated route?
Yes.
I agree that that it would certainly be a complication to taxpayers relative to the timing of the disallowed expenses. And I think that exists potentially as well with SB3 as proposed. In both scenarios, I think what you're looking at is the possibility of a large number of amended 2020 returns, regardless of what form Senate Bill 3 ultimately takes. But as you can certainly imagine, an amended return that results in a reduced tax liability feels a bit different to a taxpayer than an amended return that results in an increased liability. So I think for planning purposes, one is probably more palatable to a taxpayer than the other.
Thank you. Good observation.
Okay, Representative Browning.
That leads us to the question of the same conversation here of whether we amend or if we amend, is it the same as just killing the bill in terms of revenue impact?
So if you amend the bill concurrent with Representative Spilsbury's draft amendment, I think what you would see is a very drastic reduction in the fiscal impact, but there would be still a small fiscal impact. I believe that the requirement to qualify for forgiveness was not that 100% be spent on qualified expenses. I believe it was 80 be spent on qualified expenses. And so there would still be potentially a 20% or less amount of what we've currently calculated that would be a fiscal impact, but it would certainly be significantly decreased.
May I follow up, Mr.
Oh,
So the takeaway from what they were saying, that the accountants related to BET, I guess would be a bit different then. With the amendment or killing the bill or amending it, there may be some interaction with the BET that may be a little different is what I kind of took away from what they were saying.
Yeah, I think the direct BET impact is the same, regardless of how SB3 makes it out of committee. If it does, the BET direct impact is the same. I believe what Carl and Kevin were saying was that for many taxpayers, they have so much BET credit that SB3 doesn't really impact their ultimate tax liability. And that is actually baked into our analysis that you have currently. We account for those taxpayers that will not have a BET or will not have a BPT liability due to their BET credit, regardless of what we do.
Okay, thank you.
Further questions?
Can I, Norm, no other hands, can I interject one other thing?
Yes.
So May 11th is coming upon us, the 6 days away. I think general question, anybody, has anybody heard, including DRA, of the Treasury, Federal Treasury coming up with guidance on the $1.9 trillion? That does have a bearing on our discussions, I think. And I haven't heard anything. Has anybody heard anything?
I've been looking, I haven't seen anything.
Right, we're all waiting for the guidance and it's 6 days away.
And we're not going to do exact Senate Bill 3 on the 11th if we don't have more information such as this guidance.
Right. I'm just reminding everybody that that's still hanging out there. Thank you. Any
further questions asked of the DRA? If not, I want to remind the committee that before we get to House Bill 565, next week we're going to have an exec session on Tuesday. Hopefully we'll exec 6 of the 7 bills. The one we won't be execing is Senate Bill 3 unless we get additional information. And then on Wednesday, the 12th, we're going to continue with revenues and hopefully we can have somebody come in. And I'm hoping that we have guidance on the latest stimulus. It would help us. The next thing we want to discuss is Representative Bromley has been working with the Senate relative to House Bill 565, which we had passed. And it also appears in an omnibus bill over there. So Representative Romney, would you explain that?
Yeah, so I touched on it briefly yesterday, but I since then I did have a conversation with Senator D'Alessandro and with Representative Hill, who chairs the Legislative Administration Committee, which is where this is Senate Bill 100, which is an omnibus bill, and Section 4 relates to a committee to study charitable gaming. So our Representative Ames, and I chatted with Representative Ames yesterday morning about this as well, but now I got a little more detail. So House Bill 565 passed out of our committee, which was our version of the study committee, charitable gaming committee, passed unanimous out of us, passed on the floor in consent. Went over to the Senate passed it, but then put it on the table. It's still unclear why they put it on the table, but I could think of some scenarios why they put it on the table. Now, in our bill, we just said 3 members of the House and 2 members of the, picked by the Speaker, and 2 members of the Senate, appointed by the Senate President. In the House and the Senate version, they say 2 members of the Senate, 1 that comes from Finance and 1 that comes from Ways and Means. And then they say, in their version, they say 3 members of the House, 1 from Ways and Means, 1 from Finance, and then the other is either or other committee appointed by the House Speaker. So what I suggested to Senator D'Alessandro this morning is that, you know, we have no problem with the Senate picking who they want to be on the committee. But we may want to change what the makeup on our side is. And I said, I think it better that the members come all from Ways and Means, because on the House side, because we're the most familiar with this. And then per our conversation yesterday, Representative Almy suggested, well, can we make it at least 1 from the minority party, which would probably happen on its own. Usually they usually, if it's 3 members, it'll be 2 from the majority party, 1 from the minority party. Most committees that I've been on over the years, that's the way it works. But we could state it that way. So he had no problem. Senator Alessandro said, yeah, that's fine, but why don't you make it 2 and 2? So that's another option. This is not a partisan committee at all. We're just trying to study all aspects of charitable gaming. So I'm fine with it either way. If we amend Senate Bill 100, Section Part 4, where this resides, to say either 3 members from the Ways and Means, 2 from the majority party, 1 from the minority party, or 4 members of Ways and Means, 2 members that come from the minority party and 2 that come from the majority party. So I was just trying to get a feel from the committee of, would anybody object if either way on this? Okay. So, and then so there's a chance, these are omnibus bills. So when I talked to the Representative Hill, who chairs Legislative Administration, he says, I think there's about 6 or 7 commissions or committees that are there. He says there's probably going to be only 1 or 2 that are going to survive, and they're going to amend out some of these others. So ours being one that will survive. And then what I'm going to do, I said, well, I need to get you an amendment. He says, no, don't do that. I'm going to be putting an amendment through. Just give us the language that you want for this bill, which I'll do. So, but then he was a little concerned about, and there's reason why we should pass this, and then also, support. And then I asked Senator D'Alessandro this morning, I said, if we amend this, and if for whatever reason this omnibus bill doesn't make it through the House floor, that you'll be willing to amend the House Bill 565 on the same manner. And he said, yeah, absolutely. So we're good either way. But Representative Hill said, there could be a reason why he thought more conspiracy theory than I did. There could be another reason why they tabled it, is because they may hang other bills onto this one and make it a Christmas tree bill. And I see, I like to laugh at Rick, Dick. Yes. So he says, well, yeah, we'll make sure we pass it so that, they can't make both of these Christmas trees. So, because what happens if they do that, it could be that we just get so frustrated with the Senate that they hung all these other things that we just veto the whole, we vote no on the floor to the amended 565. So that's some of the high intrigue here.
Does anybody have a problem with what Pat has said?
I don't. I guess I wonder. I do have a favorite between 4 members from the House and 2 members from the House.
Not really. I'll be honest with you. I think it'd probably be better to have the 4.
That's what I'm thinking too.
About who's going to show up from the Senate.
A little more participation on our side.
Yeah, I agree.
Yeah.
Again, it's not a partisan thing to me. It's.
I don't think it is.
I think we need to have more representation there. Keep the quorum or whatever to do all
Yeah.
Okay.
Yeah.
I'm going to have to leave right at noon. So
okay. I'm set. Thank you. I got what I need to know.
We all set? Okay. Thank you for your participation today. And I plan on having a Republican caucus at 10 o'clock on Monday morning. And I'll talk to Susan, and she'll be having one too. This is primarily to get us ready for the executing of the Senate bills on Tuesday next week.
Yeah, and for Democrats, I'll be sending out, Susan and I will be sending out a Zoom notice for Friday midday. I don't have the exact time in my head, but it's the same time as has been stated.
11:30, I think.
What is it? 11:30? Yeah.
Chairman Majors?
Yes.
I have a Rockingham subcommittee meeting at 10. Do you think, or at 11, I'm sorry, do you think we'll be done in an hour?
I really don't know, but that's okay. Talk to me separately and we'll work something out. Okay. I
Okay.
have to leave. Thank you, everybody.
Sure.
Okay. Bye-bye.
Thank you.